Good afternoon, everybody. Welcome to Trader Merlin for your Thursday edition. Yes, John O'Donnell was supposed to be the guest today, but he had to switch. John will be on next Tuesday. We'll have J.O. on the program to dive into whatever topics you guys like. So apologize for the schedule disruption, but things happen, and I'm pretty sure we'll carry the show today and have it rather interesting as well. I always receive a bunch of questions from the viewers, which steer the show, so I appreciate that. And I got a lot of good feedback from this week's show. It's more psychological, trading behavior, and success-based pieces. So if you guys like that type of stuff, let me know. You can always email me at tradermerlin@gmail.com. Let me know what you want to see in here and talk about on the show, and I will get to that. So, beat it, Dan. Get out of here. No, you'll enjoy his session next Tuesday. So here's the question I got from John, not O'Donnell. This is another John. It says, commercial real estate stocks like CBRE were down big today. What are your thoughts? Well, look, there's a couple issues here, and then real estate obviously has its ebbs and flows, and we know that commercial real estate is definitely driven differently than residential real estate. I think what's concerning when you look at the space, and let's just bring up, you mentioned CBRE, so let's bring up that one to begin with. You've had a pretty phenomenal 2-day sale here. So if you're a bottom fisher looking for overbought, oversold situations, just in the past 3, let me put my magnet on here, you are looking at CBRE down almost 30% in 3 trading sessions. That is a ridiculous drop. And if you notice here, if we scroll back, it's one of the biggest drops ever in the history of CBRE as far as how fast it goes. You know, Steven says here, commercial real estate has been bleeding for years. I'm surprised it's hung on this long. Well, you would think since COVID, and we saw the big drop back here where, you had to shelter in place and work from home. CBRE fell from $63 down to $29. Okay, I would say that was warranted. But I'm kind of in your camp, Steve, which is, if you look at this price chart, CBRE obviously doing phenomenal. Back during this lows during COVID we just talked about, you're looking at price points right around $30, and we were trading at over 170 just a couple days ago. So in a 5-year window of time, you've gone from 30 to 170. That's phenomenal growth. And, I'm not sure about the audience here, but a lot of people are working from home. I know I work from home now. I go to the Trading Academy office maybe once every, 3-4 months, if that. Sometimes I'll go speak for a class. Sometimes Jordan will ask me or Larry will ask me to come in and talk to his class, and I'll go in and speak. But that's pretty much about it. That may change in the future because I kind of want to work from an office. I like being around people and human beings. But a lot of you work remote, right? You're working from home, and maybe you go back to work once or twice a week. But essentially, I'm looking at it as part of the reason for this big sell-off should have been much more tamed and muted. But I do think that there's going to be a lot more pressure here for real estate companies simply from the work-from-home philosophy. Yes, there are people who are going back to the offices. But from an overhead perspective, if you're running a business, it costs you so much to have a building, a desk, and all the infrastructure for your employees, or if they just work from home, it saves you quite a bit of money. Now, you may lose productivity because sometimes people work from home, they slack off. But I don't think that commercial real estate is impacted by that. Bloomberg has been talking about how AI is going to be, or real estate will be the next victim of AI. So let's dive into that one. If AI does continue on the trajectory that I have forecasted and Don Front has forecasted and many other analysts and economists have forecasted, which is a mass displacement of workers and jobs, there is a real possibility that we might start to see big businesses who are getting rid of employees in favor of AI systems, whether that's an HR department or a trading desk or an accounting department, getting rid of those employees, no longer needing that space, and maybe they sell that real estate. But in my mind, personally, I think you're talking 3-4 years out before we really start to see real estate be impacted by it. So kind of in a quick nutshell here, if you're looking at CBRE, I would be looking at this personally as a buying opportunity. I think that there's been a ton of, just a massive sell-off in CBRE. There's a couple other ones. You can go to CWK, which is Cushman & Wakefield. They've also, let me give you their percentage decline in that same window of time. From top to bottom, they're down over 30% in that window of time. You have JLL, right? This is Jones Lang LaSalle. From that same window of time, again, this is not their peak. This is just the last 3 days. They're down 26%, and I guess you go CIGI. I just brought up 4 names, but there's many others in this space. Here you go, down 22%. So CBRE, one of the bigger names in the world with regards to real estate, commercial real estate, the biggest loser of the bunch. And personally, I would say to John, who was sending this question, I would be looking at maybe selling some puts on this as a buying opportunity. If the talk track and narrative that's being pushed out by the media is that commercial real estate is going to die because of AI, where's Oliver when you need him? I actually do believe that, but not now. No way now. I don't even think another year is going to be enough time for commercial real estate to be impacted significantly by companies doing layoffs. Remember, most of these leases are for quite some time, so they're going to be locked in. But 5 years down the road, maybe we start to see more pain in that space. 10 years down the road, I don't know what the future holds 10 years down the road, but if the doom and gloom scenario, as I'm called Dr. Doom by Oliver apparently, if the Dr. Doom scenario is that AI replaces a significant number of jobs, then I think we will see mass sell-offs in real estate. It's just commercial real estate. We all need residential stuff for sure. Steve says, I ran a construction company, real estate management from my home office, cash. And I think that's kind of the new norm. I mean, I've been working from home since 2020. It's a love-hate relationship. So there's a few factors here. Number one, I think that this sell-off from John's perspective, I think this is way overdone. I think this is going to be fear-driven. I think people are just unloading with the expectations that AI is going to replace workers, and workers are going to be removed from the office, and those offices will now close. I do not. You can call me Dr. Optimism here, Ollie. I don't think that that's going to happen here. I think this is just knee-jerk reaction, people freaking out. Again, I'd be a buyer of CBRE and some of these real estate companies. I would love to have bought it down at that sub 130 mark, but here we are now at 136. But this real estate absolutely getting devastated by rumors, speculation, and I think it represents a good buying point. Lewis says, Trading Academy should buy all the offices and open facilities. I would love to. Unfortunately, it gets very, very expensive to run a physical location of Trading Academy. You want volume on there? Here you go. Ba-boom. Is that the highest spike of volume in the history of CBRE? Yes, it is. At least on this one here, from a daily basis, it's the highest level of volume you've ever seen on CBRE. Normally, it looks like it's running about 1.2, 1.5 million shares a day. Today, we did 12.45. 12.45 today, and that is an all-time high in volume. Wow. Yeah, bloodbath, but also just, if you look at it from the perspective of herd psychology, right? Obviously, these two candles, yesterday and today, represent immense pain for shareholders. I mean, if you're holding CBRE long, this is like, a Harry Carey moment. This is brutal. Then you add in this volume, and you guys know my thoughts on volume and what it means to price and things like that. I'll just move price away from it so you can see how significant it is. Yeah, you can see the pain. I mean, that's emotional turmoil going on for today. Usually when you have a gigantic move like that and climactic volume, particularly in this one that's 10x normal, that's its low. It bottoms out. Now, we already bounced significantly off the lows. If you're wondering how much it has bounced from the low point today to where we closed at, it rallied 8% already off the lows. There was no meaningful demand zone that this ran into, in my opinion. I think it had a couple bucks more to go. Right around 124 would have been a better demand zone, but it bottomed out today at 125 and 3/4. So, John, I am not at all concerned at this moment that AI is going to all of a sudden have a dramatic impact on commercial real estate. It's the renewing of loans that might be an issue. I mean, we have seen yields go up, but that shouldn't be too big of a factor, right? Here's the 10-year. We have seen yields actually over the past couple of weeks drop significantly, but we are in this slow trend up from those lows of last October. The higher those goes, if companies have to renegotiate their terms, that means their costs might be higher, and that could also be a factor, but I don't think it's very dramatic. I think it's actually just pretty mellow at this point. Oh, yeah. Well, like Steve says, just think if you work there and your stock options are falling off a cliff. Hey, you know what? They should be happy they have stock options at all. Happy they have stock options at all. I imagine it would be pretty disruptive, especially that CBRE price chart here. This has been a bad 2 days. It's not looking good to Valentine's. There's not a lot of love if you're working for CBRE and you got options, that's for sure. But this is not... It's not like this company's dead by any stretch of the imagination. I think we'd all agree CBRE's got a pretty significant foothold around the world, and they'll be fine. That's why I think that to me it looks more of a buying opportunity. And maybe they did cite in their earnings call. Big Ed mentioned the earnings. I'll read those numbers to you. So their earnings they were supposed to make $2.67. They came out at $2.73. So a slight beat on their earnings. They missed a little bit on revenue. Supposed to make 11.69 billion. They made 11.63. So you barely missed. You missed by 0.5% on your revenue targets, and you beat your earnings by 2%, and you're down 30%. So clearly there was something that was mentioned in the conference call, which I did not listen to. I don't really follow CBRE much, but the point here is fear-driven, oversold, panic euphoria. To go to Oliver's Dr. Doom comments about me, look, that's fine. I'll take it when it's there. But this is, it almost feels algorithmic. It almost feels like people are creating this impression. What's his name? Jim Cramer. I mentioned you guys should all watch that video where he talks about manipulation in trading world. And he talks about this term. It's called fomenting. It's not legal in the financial markets to foment, to create an impression about something and act on it from a trading perspective, basically lie. And that's what he would do. I mean, he specifically tells you, you can't do it, but here's how you do it. And he showed you how he did it. This to me looks like a foment type of thing. You pump a story that says AI is going to displace real estate, commercial real estate, and absolutely crush it. And we're going to have nothing but skyscrapers that are empty. It's going to be like China. And I don't know. I think that is fomenting a super negative narrative that is not necessarily true. 5 years down the road, if I'm still doing this show, or 10 years down the road if I'm still doing this show, I would like to revisit that and see what we actually look like. I think that we will see occupancy in commercial real estate buildings decline, but not fall off a cliff. I think we'll have adaptations. Remember, if we go to the doom and gloom scenario, and that doom and gloom scenario is that AI takes over everything. AI takes over all systems. AI does all robotics. We have no real workforce anymore. That's the doom and gloom scenario that Don Fron paints. He's all in on AI, and he thinks that by the end of the year we'll be almost 50% robotics. I think that's too crazy. But what if, right? If all of a sudden we go to a world where AI runs everything and all companies and all organizations are run by robots, what are the humans going to do? Well, the governments are going to have to give us money so that we can actually live and spend and do things. What I think will happen is giant, commercial real estate pieces like that will be entertainment centers. We will find things to go do, and maybe a 30-story skyscraper will just be gutted inside, and it'll be game rooms on one floor and air hockey on the other and indoor pickleball courts on the next. I mean, there's going to be things for us to do and spend our money on. I think universal basic income 10 years down the road could be a very real reality if AI does do so much displacement. But again, I'm not worrying about those things, right? I'm trying to accumulate financially as much as I can. So if the proverbial doo-doo hits the fan and AI does take over the world, then I'll be okay financially. We'll have robots occupying the offices. They got to be located somewhere. Sure, I agree with you there, 100%, Liz. Many of the systems, though, will be just giant server-based pieces, right? So the robots, my assumption, will most likely be in just giant factories, and then the office spaces, like the 100 floors. Who needs the 100th floor anymore? Well, let's make that a sun deck or something fun for people to enjoy. So I went a bit long on that one, but John, my thoughts on it being down so big, I think this is personally, I think it's a fabricated event. I think this is one of those pieces where the media grabs a narrative and runs with it and way overdoes it. The narrative that AI is going to replace commercial real estate and just destroy the entire commercial real estate is hogwash for today. Not 10, 20 years down the road, but for today, hogwash. So I would look to CBRE and some of these others I mentioned, CWK, JLL, CIGI, as potential buying opportunities if you felt comfortable taking that risk. I mean, I think there's some people that don't look at, how many of you today rarely look at CBRE and are looking at this going, I might dabble on that one. Exactly, Marsha says, which creates buying opportunities. Yes, exactly. And I think that is, I think that's what this has done here. Big, you'd never buy CBRE? Let's see. Do they have properties in China? And how is China's office space vacancies? I know, again, Wolf, it's a good point. I am a victim of what the media leads me to believe. I've heard countless stories, as I'm sure many of you have, that China has these cities that are absolutely 100% abandoned. And I've actually seen videos of people who have hiked out to those areas and taken video footage of it. And in fact, it looks like there's abandoned cities. I don't know. I until I see something with my own two eyes, I have a very difficult time trusting stuff that happens. when you're feeling down or depressed or just bored, the rabbit hole of something like Instagram or TikTok can pull you in. And I was bored yesterday watching some TV, which I rarely ever do. Just was sitting on the couch, which I rarely ever do. And I was watching this cat video, and I mean, it's hilarious. Some of them were just so good. But then I'm watching, I go, there's no way this video is real. And I watched it again, and I spotted all the AI mistakes in the video. And I think that I'm pretty savvy at identifying these things. In another year, even with my experience and understanding of AI, there's no way I'd be able to tell these deep fakes. They're going to look so good. But yeah, I never know what to trust anymore. So as far as does China have massive vacancies, I don't know. My extent of experience in China has been landing in Shanghai airport or Hong Kong and that's pretty much it. I don't leave the airports. Not yet. It's on my list to go and explore China. I would love to do that one day, but I'd like to speak the language. And man, for my Chinese viewers out there, I don't know how you do it. Does anybody here speak Mandarin or Cantonese? If you do, I want to know how, from a Mandarin or Cantonese perspective, you can understand two letters. H-A, right? For all my Americans in the room, we're all going ha, right? Ha, ha. Well, in Mandarin, and I think in Mandarin has like 7 meanings. In Cantonese has like 13, and it like that. And then, how do you know you have Chinese viewers? I'm making an assumption. I'm doing a statistical probability assessment that at least someone in the audience is Chinese, right? If you look at global population, the odds are pretty good. But in Mandarin and Cantonese, ha, you can go ha, 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 ha. And each one can be something completely different. Like, how do you go out and do business in China and have cocktails? Because I know I start slurring my words after 3 or 4 drinks. I'd be a total mess over there if I was trying to speak Mandarin or Cantonese, just saying the 2 words, ha, would drive me nuts. Teepsop says tones, right? And it's difficult. When I'm in Thailand, I really try my best to speak the language with their tones because I think it's culturally sensitive to go and they appreciate it when you speak their languages. I know. Sorry, Liz. I may have cursed on air right there in Mandarin. I don't even know it. But, in some of those, you just feel like you're embarrassing. You're embarrassing the people if you speak that way. Like, in Thailand, to say hello, and in America you'd say hello, hi, like that, right? In Thailand you go sawadee-ka, and you feel like you're mocking their language, but that's how they do it. Sawadee-ka. You have to be real high pitch. Yeah, it's tough. Cultural, it's fun. That's why I like traveling. More and more exploring, but China is a definitely different one. Anyway, I'm off topics. I'm rambling here, folks. Let me go back. I don't speak word Chinese, so you didn't. Is it Mandarin? I forget which one it is, Steve. I think Mandarin. I think Mandarin was the easy one, and Cantonese is the hardest one. Yeah, I have a friend that she can read all the Chinese characters. That, man. I mean, someone could pass you a note in Mandarin or Chinese characters, or heck, even Korean or Vietnamese or Thai characters, and you just be like, I have no idea what that says. Anyway, we could do a whole show on languages. Different one. Vikram says, do you think that CRWV trend changed up? I don't know. This whole tech space right now is under a bit of pressure. So if you look at what's going on with CoreWeave, okay, CoreWeave, from my perspective, if I say, do I think that it's going up? I would say no. So if I'm looking at this right now, let's just look at the trend going across the tops here, right? And again, I don't care what the company is. Let's forget about the whole tech space and AI and how they're involved with NVIDIA. But let's just put a line across these tops here. Come on, Merlin. There we go. So you've got that. I can offset this line real simply by right mouse clicking and do clone and put that along the bottom. And you've got a fairly distinct channel going down. So for all intents and purposes, Vikram, for me at this point, my bias is to the downside. Now, within that channel, where do we stand, right? We're near the upper side of it. If I were to zoom out and just look at this part here, right here, I'm like, okay, well, it's starting to look a little bit better because it feels like it's making higher highs, higher lows. But I'm not sold on that yet. It feels like just like erratic choppiness and an overall downtrend. So I personally, for CoreWeave, I would most likely leave it alone. I would be more inclined to go short up here near the top around 114. However, I have a little bit of an issue shorting AI-related stocks because one post, one comment, one deal from OpenAI or NVIDIA can cause these things to jump 30, 40%. And I just feel like that is just not, I don't want to put that on my plate as far as risk goes. So Not a big fan of CoreWeave's chart right now. You know, the feeder of CoreWeave is NVIDIA. NVIDIA doesn't feel like it's really going anywhere either, right? NVIDIA, for all intents and purposes, for the past 2 months, month and a half, has just been channeling sideways. I'll put a yellow box on here. Back to the yellow boxes. So there's your NVIDIA box it's been stuck in since really November 24th of last year, just going sideways. So until we get out of that, I don't expect to see big moves in the AI space. Now, as Liz puts in the chat, she's on the brighter side of tech. AMD ripped tonight. Yes, AMD had great earnings. It got upgraded by a bunch of analysts. Not AMD, excuse me, Applied Materials. You know, Applied Materials looking absolutely fantastic. I mean, this is just incredible. By the way, it's up another 12% in the after-hour session. It's at 370 right now, and it closed today at 328. So phenomenal rip to the upside. That shaded blue line at the very top is where this is at. And I'll put this on a monthly for you just so you guys can see what this has done. Here's your monthly chart of Applied Materials. And, you know, it doesn't get much better than that. Remember, these Applied Materials they're not the ones that are making chips per se. They're selling components and pieces of chips. I guess they are making some chips, but really materials to make the devices that are running all of the tech that we have. So yeah, they're looking fantastic. Great earnings, jumping up in the after hours. If you look at what's going on with the NASDAQ 100 after hours, even though Applied Materials is not a major piece of this, it is carrying it up a little bit. We're up just a little bit in the after hour session on the NQ. Okay. TSM, but we've said that for a while, right, Big Eb? Like, of all of them, TSM's the one you want. They are the linchpin. They're the king of it all at this moment in time. Does that shift? I mean, you look at in this space, NVIDIA is making the best assembled chip products, and then you have TSM is the one that's making the chips for those chips products. And Micron and AMD are giving pieces and parts in different places for it. All of those companies are doing really well. Now, I've also mentioned this many times in the past. For those who are new, you know, building out a portfolio of Micron and TSM and AMD and all these different ones, you might be better just by going with SMH ETF, which is the VanEck ETF. That also looks incredible, and it gives you diversification. It spreads that risk around quite a bit. If you are curious as to what is in an ETF, easy thing to do, you go to barchart.com. There's actually a lot of different places to go, but I'll go to barchart.com. It's got my articles, which I've not written in quite some time. SMH. So that's the VanEck semiconductor. There's many semiconductor ones. This is just one of the more popular ones. So if you type in that symbol, you go down here to constituents on the left-hand side. If it lets me click on constituents. That's interesting. It's not letting me pick the constituents of this ETF. All right, well, that didn't work. That's weird. I don't know why that didn't. Let me retry this one again. SMH. Huh, weird. It's not letting me go in the components. Well, you can probably pull it up on another site, but it used to be a cool feature of bar chart. Apparently it's slacking. And the reason I would encourage you to do that is so you can look through what these different ETFs hold, so you can see what their weightings are for a specific company. Let's say you really want to have more exposure to AMD or AMAT. You could go through these specific semiconductor ETFs and find one that has a heavier weighting in those. Let's just go. I'm just having SMH Holdings. Semiconductor ETF. There it is. The VanEck. And then portfolio. So there you go. Really hard to see. Let me make it larger for you. Number one holding, 18% of the portfolio is NVIDIA. Number two, Taiwan Semiconductor, 11%. You've got Broadcom at 7%, Micron at 6.3%, ASML. Where's AMAT? AMAT 5% of this one. NVIDIA seemed to go down after earnings, even after killer numbers. Let's go and look at NVIDIA. So here's your NVIDIA, but they're not. Their earnings, you said they're going down. They don't report until next Wednesday. So next Wednesday is theirs. I think you mean every time they report. It does seem like, at least the last one they sold off from earnings. The last 3 times they reported earnings, they've sold off aggressively on their earnings announcement. 4 times. 5 times. So the 3 days after earnings, the last 3 times they've reported, aggressive sell-off. Actually, every time. That's an interesting one there, Tofi. You know, does that mean you go short into their earnings announcement? Not me. I don't have those. I don't have the guts. I actually, I'm depressed today. So here's my reason for my depression. I had a bad loss in January, which is not, fine. That's a bad trade. And then I have been pretty bullish on the long-term prognosis for Coinbase, but with the beatdown that's going on with crypto, Bitcoin in particular, and now with the CEO of Coinbase on Capitol Hill, we talked the other day about how President Trump is, irritating a lot of our friends and neighbors, if you will, in the European Union and other countries. Well, the CEO of Coinbase is doing the same thing on Capitol Hill. He's stalling this Genius or the Clarity Act right now, and really pushing the agenda of not voting through the Clarity Act because of some of the things that are in it that are anti-stablecoin. When you do that, you start to make enemies of the politicians. So not a good thing to do, and that could be what's impacting coin. I dumped mine today on a break of 145, and I'm pretty upset about it. Okay, well, they reported. I didn't want to carry it into earnings, and that was my big thing. So today I had an alert set. When we broke 145, I dumped it, and that turned into be a pretty significant loss. That'll be about $20,000 loss on that Coinbase trade. So not a good one. That was a bad one. Did not see it continuing on like this. I thought we were going to bottom out for sure right around 165, but it kept on going. So not a good day for me. And then in the after hours, their earnings weren't that great. And that's kind of why I told myself, get out of it. Just don't take that chance going with the earnings. So I'll put a line 144.91 is where I got out. But let me put that on here. 144.91. So that was my exit this morning. And, at one point I was feeling pretty good because we were down, sub 140. Then their earnings came out and this thing dropped all the way down to 134. And I was really happy about that. That'd be another $10,000 loss. But we're actually up a little bit in the after hours session. So, just to spite me, what's going to happen? Everybody knows what's going to happen. They're probably going to have a huge day up tomorrow because I've dumped at 144. It's okay, Liz. It's part of the game. Not that big of a deal, And I can't be angry at it. I followed what I said I was going to do. The only mistake I made is I actually had an order out to buy the March 20th puts yesterday at $8. And I had a limit order out there, and I got a little bit greedy. I tried to buy those ones, but I tried to buy them at a price that was a little cheaper than what it was going. So I ended up not getting filled on those options at $8, which... What would those be today? So it was like 805 is what I had my limit order at. But let me go and see what they're worth today because they probably would have been a much better. It shoulda, coulda, woulda, right? Shoulda, coulda, woulda. But unfortunately, I didn't get filled on that Coinbase one. Let's go to March 20th. Go to the 140s. So those puts today would be worth about 13. So I would have saved about $5,000 on that trade. Oh well. Is what it is. Still hold my Tesla. Not liking what happened with it today. I mean, Tesla just ripped up this morning and then cratered. I mean, at one point today, Tesla, if you look at this chart, Tesla was up at a high point of 136. And I was like, oh, my shares are going to get taken away from me. Fine. I'm okay with that. That gives me a nice profit. And then it just fell all the way down to a low from 136 all the way down to 436 down to 413. Now, that's a pretty giant swing intraday. Not sure exactly what the case or justification was for that. I did see Elon Musk making a case, an argument, and talking about colonization of the moon, and had some really cool video to play for it. So, oh well. Louis says, I had a situation where I went into a trade, and while I was in the trade, the stock changed names or merged or something, and now only has the chart for a couple of weeks. I've had that happen when the symbol changes. There's nothing you can do from a technical perspective. And you can go off of old zones. If it keeps the same price, you could technically use the old chart. But if they switch names, most of the time when they switch a company name, it'll just change the chart. Right? The chart will be the same, but it has just changed the ticker. If they've merged with someone else, that's where you lose the data. And I've had that happen a couple times where they merge. Unfortunately, you're just stuck with that one. Even the pro makes a mistake. I don't feel bad. Yeah, Andy, look, I don't claim to win all the time. I share most of my losers with you because I think that those are better learning lessons. But yeah, was there any specific catalyst for the dump today or general concern with tech? From what I'm hearing, it's just general concern with tech. And Liz, it's interesting because it seems like it goes one day we're all super bullish back in AI tech stocks, and next day the bearish phase is there. it's like you're getting whiplash on a daily basis with regards to AI. And in the interview that I did yesterday for the Money Show, I was with a guy named Mike Lee, and Mike Lee is very bullish on AI, right? He's very bullish, and we can all have our opinions. I'm actually very bullish on AI too, but I think there's going to be a shakeout. I think a lot of these companies are going to disappear because they spent too much money. If you look at his comments, I don't know how many of you guys watched the video. I know Ollie did because he commented on it. But if you look at the video that was in the interview, he talks about extreme valuations for AI and way over valuations because you're talking about future delivery of expectations, and that's why his opinion that his OpenAI is going to just do so well. They don't have much revenue now, but they're going to 100x their revenue like next year, the next 2 years or something. I'm like, well, that's a hypothesis, right? I could hypothesize I'm going to finish my book by next month, but that's probably not going to happen either. Don't worry, we'll get to the book part later. But these people are making these really lofty assessments, and if they don't get to those goals, then prices are going to come down. And same thing was happening for the dot-com era. There were companies that were saying, oh, we're going to 100x our earnings because we're now a dot-com company, and it never happened, and they went to zero. So I think you'll get a shakeout of tech companies, but ultimately it's the big ones that survive typically because they've got the clout, they got the funding, they got the connections, and that would be obviously the companies we talk about here on a regular basis, the big stuff, NVIDIA, Qualcomm, maybe CoreWeave, Oracle obviously being a major player for decades now. But yeah, there we go. Merlin, is there a website that will tell us the number of S&P stocks below the 50-day or 200-period moving average? It's a great question, Wolf. I don't know of a site that does that. When I do the analysis, I usually pull up my old version of TradeStation, which I haven't looked at in a long time. But yeah, different platforms will allow you can run a filter and add in like the S&P 500 and then put in a 200-period moving average in the table and then filter by that. You could do that here in TradingView. So if you go over to your watch list, so if I go here watch list, I have a couple different ones created. Let's go to watch list, and I've got my biggest losers. So here's your biggest losers on the day, right? Man, there's a lot in here. Some big ones. Biggest loser on the day from a change perspective was, come on, it looks like this MCRB, down 41%. Okay, you can go in here and edit out this filter. Let me go to, where is it? Interesting. There, I don't remember how I did it, but there was a way that you could filter these things very easily. You can go through here and filter for 20-period moving averages, 200-period moving averages, and modify. FinViz has a screener. They all do. Naum says, will tech drop more tomorrow? Well, do I know everything? The answer is 100%. I do not know everything. But let me get out of this. And now I wonder why it's not going to give me my regular watch list. There it is. So let's go back to a daily here and talk about tomorrow. What might tomorrow hold? Well, if we go to the QQQ, right, you want to talk tech. Judging by what I see here, the kind of oversold red candle on the NASDAQ 100, you would be led to believe that we're going to see a down day tomorrow because it feels like the media is on that rotation, if you will, of negative press, negative coverage. So the media side, if I take the media probability, I would say there's a good chance you're going to see the market sell off tomorrow, just off the media side. However, there's stories that came out today after hours, and those stories paint a little bit of a different picture. Those stories paint something that might be a little bit rosier in the eyes of investors, and that's going to be earnings. So I would go out here and I would look at earnings. Okay, here's your earnings for today. Oh, this stupid ad. Let's go to market cap, and you can see here, Applied Materials blows out earnings and is up big. Arista Networks blows out earnings, up 15%. Okay, Anheuser-Busch, well, they beat earnings and they're up almost 4%. So you have from the tech space some other names in here that I think are going to change that narrative in the eyes of the media tomorrow. So again, I can't look at one piece and say it's going to be bearish or bullish. I would think that all things being equal, if there were no big tech earnings today, the media would push the market down tomorrow and say tech rout, AI is out of favor, and here we go, we're going to go lower, be careful, sell your position. If you look at the tech earnings, it paints a positive picture. And I think that will cancel the tech negativity that the media is going to portray. Because now they're going to talk about Applied Materials earnings. And they'll talk about forecasting what's going to happen with NVIDIA's earnings and go from there. So you have those two things balancing each other out, and I would say actually leaning to a slightly bullish day. Okay, what else is going to drive it? You guys can type in a chat what else might drive the markets tomorrow, and I'm happy to go look at that. One other thing for me is you got to look at this economic calendar. So we had today, here's your Thursday economic data, existing home sales that were pretty weak, right? That was not a good number, but it's certainly not a good number. We were supposed to come out at 4.16 million. We came out at 3.91. Not good, but still okay, right? Not atrocious. Our unemployment claims were higher than expected, so that was bad. We had two pieces of bad data today. Big Ed says home sales sucked today. It did, but I mean, I wouldn't say that this existing home sales was like atrocious. It's not like, oh my goodness, this is really, really bad. But you look at the chart, yeah, it's definitely one of the lower prints we've had for quite some time. I mean, this is the lowest print we've had since 2024. Way below expectations. So yeah, that's not good. But that's only 1 point worth of data. Tomorrow, you've got a bigger piece to deal with, and that is going to be consumer price index. Remember, we've got a couple days later, we're going to have, or next week, we'll have the core PCE price index, or sorry, not the core PCE. We have other inflationary data next week. For us, we have our CPI numbers. That's expected to drop from 2.7 to 2.5. Now, look, my anticipation of numbers clearly has been off over the past couple weeks. I've been right on some of it, but the jobs data this week just did not make sense to me. However, looking at this big picture here of CPI, we had massive inflation, upwards of 9% back in 2022, according to CPI. And here we are now sitting at 2.7. The Fed wants it to be 2%, but they've been cutting rates, which in theory should be pushing inflation up. Now, I've been pointing at the crude oil chart as being a reason why I think you're going to see inflation move to the upside, because since December, it's been moving up. From the low of December to where we are today, I can't even draw the chart right, to where we are right now, according to crude oil, the price of crude oil has risen about 14%. Not 100%, but still enough to impact the markets from a inflation perspective, because crude oil is petroleum products and so much is hinged to the price of crude oil. This is going to have an impact. But what other pieces are going to bring that down, right? You look at the softs, for example. Let's run through some other commodities. You've got lean hogs. Well, since November, that's been on a pretty aggressive rally. Here you got cotton. Cotton, for all intents and purposes, has been just dying. Had a giant jump up recently, but that's probably contract rollover. You've got wheat. Okay, wheat's been on a move to the upside. You've got coffee in a free fall. I don't know how much of a weighting on CPI coffee is, but coffee is an absolute free fall, and I can assure you that Starbucks is not lowering the price of their iced mocha frappuccinos. So if this continues to fall like this, folks, you might want to look at buying yourself some Starbucks, because the price of coffee in the past 5 days from peak to bottom, actually 8 days, dropped 23%. Ba-bow! Time to buy some Starbucks. What does Starbucks look like? Starbucks got a nice little uptrend going. And if that free fall in coffee continues, their earnings, when they come out in a couple of months, their earnings will be in May. That could be a really good number for Starbucks if that does, in fact, reflect. So let's keep going on here since I'm on it. Soybeans. Soybeans jumped to the upside here. You've seen a pretty nice move up in soybeans. Corn, kind of flat for the past couple months. This is the one that bothers me. Cattle. Since November. I love a good steak. No steaks for Valentine's Day. Since the lows we saw back here on November 25th, the price of live cattle jumped almost 18%. Sugar, not looking so sweet. I mean, sugar, one of the major components in everything, is down huge. From its high in 2023 to where we are today, sugar is down 50%. Man, love that as well. Although I cut all sugar out. Well, not all. You can never get rid of all sugar. But I tell you, one big thing that's helped in my fat loss transition to get my six-pack back has been cutting out sugars. I love a good Dr. Pepper or Crown and Coke on the weekends. Cut it all out. No more sodas. Absolutely. Yeah, bad for the diabetic people. Look, sugar is probably the most damaging legal drug on the planet. How about cocoa? Chocolate. Man, and I do like chocolate, but dark chocolate's okay for you. It's the refined milk chocolate that's not bad. That's down 71% since 2024. So, but that's not going to have a big impact on inflation. And here is orange juice, which also has been in free fall. So some of these commodities looking great. I don't see the price of my chocolate dropping. I don't see the price of sugar-based goods dropping. So corporate profits are probably going to rise. This might be the reason why we're seeing the equity markets look so good. What about a probiotic soda? You seen those? No sugars. No. You're talking like a kombucha? My buddy used to make kombucha, and when I understood what it was like, I don't want it. It's this giant living bacteria cap. It's supposed to be good for you. I'll just drink water. Water's good for me. Water's good for me. All right, Michael, what do you say here? Market's so overbought that market needs to do another correction, that you can't chase this market with earnings hasn't been that great. Walmart needs a correction to that, hard to chase this. Well, look, the markets, I would agree with you that the markets are overbought, but we are also dealing with a paradigm shift. We're dealing with a double new technology. We're dealing with multiple things impacting this market. It's not like you have the .com rally. You've got AI and you have crypto. So you got this kind of double whammy of technological revolutions happening at the same time. I think the market could get a lot more overbought. It's just you got to be careful and set some parameters for it. For example, here we are looking at the S&P. You get a close down below that 67.71 mark, then yeah, I'm going to be more inclined to be bearish. But until this market makes new lows, I think you have to stay long. You just have to. It's brutal. Pags and Tiger, that too will be going up since... Michael, you think Pags and Tiger are going to go up because you own them and you listen to every pod? I think you run a filter. I think you run a filter for all the positive news that's faced these companies that comes through the wire. So let's look at, here's Tiger, up FinTech Holdings Limited. Don't like the chart right now. I liked it several months ago, back in 2025 when it was on an uptrend, but you're no longer an uptrend, you're in a downtrend. This chart does not look good. And the other one you wanted was PAGS. Okay, this one still looks good. And the last time you brought this one up, we said it looks good. Why do we say that? Because it's been a big trend. You got higher highs, higher lows. So this looks good. But those ones don't look that great to me. Oh, I can talk about silver. Dan was giving me a hard time yesterday because I didn't talk about gold. That's a good one, Drew. That's a good one. Well, Michael, we'll just keep putting out. Feel free to tell me all your trades. We'll just build an inverse portfolio and see how that one does. Oh, yep. All right. What was the other company you meant there? Weak dollar. Weak dollar could cause inflation policy when people have to get jobs to be in food stamps, cause lower unemployment. Why would you drop rates? Well, when you have low unemployment, so right now you have a situation where the unemployment numbers are declining, right? And whether you believe it or not, I just have to take it for what it is. We saw yesterday, was it yesterday? The unemployment rate for the United States on Wednesday, there it is, came out at 4.3. Expectations were we're going to come out at 4.4. So this was much better than expected in the eyes of the Fed. If the unemployment rate continues to decline, and let's say it goes to 4.2, 4.1, then there is no need for the Fed to cut rates. And actually, they're most likely going to leave it right where it's at. Typically, if unemployment rate drops really low, that means you have full employment. You have more people working, which means more money in the system. More money in the system means more consumption, which means more demand, which means inflation goes up. So the lower this goes, it starts to push the inflationary numbers up. Now remember, if the inflationary numbers rise, that's going to cause them to raise rates. So they raise rates to fight inflation. And when they fight the inflation, those rising rates start to slow down businesses. Businesses start to lay off and the unemployment numbers start to rise. So it's this weird balance, Luis, of where you have constantly fluctuating data where if you adjust one thing, it impacts the other. And it's this teeter-totter for the Fed of what they should be doing. So the fact we saw unemployment drop from 4.4 to 4.3 had a lot of people going, uh-oh, that means the Fed is not going to lower rates at the next meeting. Yeah, it's an absolute tug of war, balance. It's a balance beam. And you can't be too aggressive because if you go too aggressive on one side, it'll move way too quick in the other. So, the challenge I see the Fed having, and I think we've all witnessed this over the past couple of years, has been trying to do things slow enough so it doesn't go crazy. So here is the probability now. Remember a couple weeks ago, we were looking like a 70% chance of a rate cut, of a rate staying the same. Now it's 92%. 92%, whereas 1 week ago was 76.8%. So the probability, because of that unemployment number on Wednesday, surged and pushed the higher probability that we're not going to get a rate cut. We're going to get things to stay right with that. And markets technically don't like that. They want a rate cut. Rate cut means cheaper money. Flood the system with cheap money. I'm going to continually reference this number here. So the December 9th meeting, which is a long ways away. That's 1, 2, 3, 4, 5, 6, 7 meetings away. The probability is right now as we speak that we're going to get 2 rate cuts. And I think a lot of people are expecting there to be much more than that. And I don't know. I don't think we're going to get much more than that. I mean, heck, I was wrong last year. I owe Big Eb a lunch here and a beer. I opened my big mouth. He said just a beer, but I had to throw lunch in there too. So now I'm on the hook for lunch and a beer. And my guess is Big Eb's probably going to bring his whole family. So I'm going to be on the hook for like a $700 lunch bill. But that's okay, Big Eb. We're good with that. We're fine with that. Yeah, this is one the markets are hanging their hat on this number. You know, it's important to watch these Fed funds futures because this is people actually betting with real money. This number here does not reflect just ideas. This reflects actual futures contracts being purchased and bought and sold, speculating on where the rates will be at that Fed meeting. You can go and buy right now Fed funds futures for the December 9th meeting of this year. And right now, probability is higher based off of the sales that you're looking at right about two rate cuts. I know you do. I know you do. Yep, that's exactly what they are. Are they accurate to predict a rate cut? No. I would say, great question, Marcia. I would say that they're very accurate for like the upcoming event, for like the next meeting. But as far as predicting what December's is, that's a total crapshoot, right? Look, when I, in January, do a forecast, right? I say, hey guys, what do you think it's going to be by the end of the year? It's more just for fun, you know, processing what you think might happen and see who comes closest. But the reality is not one person in this room knows what's going to happen. It's all speculation. Anything can happen. By the way, I don't know if you guys, after the show yesterday, if I'm hoping that yesterday's show on predictive markets kind of triggered some thoughts and actions to you. There was a bet for how long the national anthem was going to be, like how long it was. So I'll tell you what, there's a YouTube video of a guy that lives, I don't know if he lives there, but he was standing outside of Levi Stadium with a stopwatch when they were doing their sound check with the flyover. And so he literally stood there with the stopwatch, and as soon as they started, he clicked his stopwatch, and he got it to the exact second, and he put a whole bunch of money on that time. Insider trading, or just really, really smart. These predictive markets things give you tremendous opportunities, guys. Tremendous opportunities. Can you make a show comparing today's economy with the 1920s? Similar? Oh, man. Luis, I would tell you this. If I had a lot of free time, I would do it. If I was getting paid, I would do it. That's a lot of research that I probably won't be able to do that one for you. What I'd rather do is bring on someone who might be an expert in that area. So I'll see, when I go to the Vegas Money Show, Luis, there's a couple guys there that are old timers and veterans and like really, really versed in that. And maybe I'll bring them on to talk about that. I can certainly talk about the 2000 crash. I can talk about the financial crisis because I lived those and I was there and I can tell you the similarities, which is what I do. Are you predicting a crash? Well, yeah, absolutely. I'm predicting a crash. 100%. I guarantee you, Marcia, guarantee you a crash is coming. I'm willing to bet you at any amount of money that there will be a market crash. When will that market crash be is a different story. Is it next year? Is it 10 years down the road? I don't know. You know, I'm kind of with Michael here. I do believe these markets are getting a little bit overbought. I think they're getting a little bit long in the tooth. I think that for me personally, I look at what has created this market rally has been spending, rampant spending, not just on the part of the government, which is now $37 trillion in debt, but also on the part of the Fed, propping up the markets by buying mortgage-backed securities, buying treasuries, and buying bonds to keep rates artificially low. This market is manipulated. And so far, they haven't been forced to unwind. There hasn't been a day of reckoning. I think that day is going to come, but I just don't know when. Just definitely don't know when. I hope that when it happens, I am positioned in a pretty big short position. Right now I'm long and I'm getting smoked on my long, so it's not a good one. But all markets over time are going to have massive impulses and massive corrective phases. And I've shown this chart to you countless times just as a matter of perspective, and I'll put it into logarithmic, which makes it a little bit different. But for Marcia, put your chart here on, let's say, a monthly time frame, and look at that chart. These little blips back here, this 50% decline, that's the dot-com bubble. This one right here, this 57% slide, that's the financial crisis. And those are some of the biggest crashes we've ever experienced, ever. Those are, Macaulay Culkin, smack your face. Some of you lost 50% of your retirement. Those were just, you don't even want to talk about it because it hurts so bad. And look where we are today. You think that this is normal? This is not a normal market. So, at some point that day of reckoning is going to come. And Oliver always calls me Mr. Doom and Gloom. Look, this whole move up here, I'm making money long. I may think it's going to crash, but I'm not letting my opinions force me to go short. A couple times I have. But right now, you got to just join this rally. As irrational as it seems, you've got to stay long. Until we get a breakdown below. I had it on the SP. Well, I can do it on the SPX here. It actually goes a little bit lower. I would say on the SPX, if you get down below, let's say 67, 80, that's kind of that tough point. That's a break point. What comes first, Dow 10,000 or market crash? Well, if the Dow gets to 10,000, you're talking a significant market crash. That'd be an 80% decline in the market. The Dow's at 50K. You mean Dow 100K, I think is what you're talking about, Marcia, there? I think you made a typo there. Yeah, Dow was already at 50. Yeah. Great question. Do I think Dow 100,000 or Dow market crash? Market crash for sure. But before we get to 100,000, let's just take a look here. I'm going to just do a little, we'll put this on a weekly so I can spread it out here and just do a long-term perspective, right? So let me just look at some data here. I've got this trajectory going for the Dow. There's our current angle, right? And I'm trying to bring as much data as I can in here. So I think someone mentioned the other day that we are looking at Dow at 100,000, but what did Trump say by the end of his term? That would be way up here. 100,000 be way up there. So in order for us to get to that point, the angle of the markets between now and then would need to look like that. I don't see anything acting. AI could certainly push, but I don't know if we get that big of an angle. My guess is you'll have a correction before then. And I don't know what's going to happen. I personally think it's going to be a black swan event, one we just didn't see coming. I think it'll be political. It could be, global tensions flaring up, and all of a sudden someone does something stupid, which I just hope doesn't happen, but I don't know. I think the probability is here that we're going to get a crash in the markets before we get to 100,000. The question, Marcia, would be, what's your definition of a crash, right? Would you call a 20% correction a crash? What would you guys say would be the percentage number where we get a crash? So maybe I should ask AI. Let's ask AI here real quick. See what AI tells me. Let's go ask Grok. Since Grok knows everything, you guys tell me what you think a market crash percentage-wise would be. You guys tell me. Let's see if I can get this over here on Grok. What percentage? 20% is the definition of a bear market. What percentage decline? What percentage decline is considered a crash in the stock market according to Grok? For me, I would say like 30 to 40%. It says there's no single universal one. It's 10% or more over a short period and then a few days. Bear market's 20%. Stock market crash is a rapid drop. Yeah, for me, I'm thinking like 30% would be. But yeah, the bear market really is like a 10 is a correction, right? So 10% is a correction. 20% is a bear market. So for me, I would say something like 30%. But the way AI looks at it is not the percentage, but the speed in which it falls. So they're saying 20% could be considered a crash if it happened in one day. Yeah, I would agree with that too. What level of land on that range? So let's go look at some price charts here. And since you mentioned Dow, we can stay with the Dow just because that's where you were at, and we'll look at the Dow. So here's your weekly on the Dow. And I'm going to go and put where are some decent levels. So there's actually a pretty decent demand zone at about 42,000. I don't see anything before that just jumps off the screen at me. I know I would want to whittle down this area here from like April 14th of last year. I know, it's okay. We'll just do it. There's also this spot right here where we had our last big breakout. So let's just say roughly there's these three kind of levels I'm looking at, right? But oops. 37,000, 42,000, and 32. Interesting. 5,000 blocks. So what percentage pullbacks would those be from today's price, from where we're at right now, to get to 42,000 would be about a 14% decline. Only 14%. If you got to that blue line, that's going to be about a 24% decline, which I think is totally doable. I think it's absolutely doable. I don't see that as being a stretch at all to get down 23%. To get to that lower point, you're looking at about a 33% correction, right? So I don't know. I don't think that any one of those three lines is out of the ordinary, especially when you take a step back and you look at this chart. It almost feels like we're due for it. It's just when, right? Just when. Liz says for YM at 100,000, we'd need this year and next to average 33%. Seems unlikely, right, Liz? If we're going by probability, yep. 33K is a return to a baseline, and there you go, 33. Yep. The answer to the test. Well, look, my hope is, and is this obviously I'm self-interested, but I hope for you guys that if it does come, and I want to see if Oliver's going to be the one that gets. Oliver will probably get hurt the most here because he's a perma bull. But if it does roll over, all of you should have just some trigger points and says, okay. Party seems to be over. I'm not 100% sure, but if it does, let's get out and go to cash or build short positions, right? Or at least start buying protection in your portfolio. Like last week, one of the saving graces for me was buying puts to protect those two positions I had, and I almost bought it again for Coinbase. Those really helped hedge my losses. Good, Ollie. Got some insurance. You always should have insurance out there. Buy some puts just in case. The Dow looks almost too good. The Dow looks just fantastic. I mean, it has not made. You could argue that here on August of last year, it made a new low. Other than that, it really has been making higher lows. Just fantastic. Gorgeous, gorgeous chart. So, Wolf says, yes, and NASDAQ look like they're starting to roll now on a daily. Yes. So if we go here and I'll do the ETFs. You could make the argument that we've already just broken this swing low from January, right? We're now below that. So I think the real line in the sand for the NASDAQ is this point down here. Let me use the snap mode so I can make sure it's perfect number. Bam, 580. 580 on the triple Qs. You get down below that, I think if you're still holding long, you got a problem. That to me would be a much bigger. Put on the 50-day moving average. Okie dokie. All right, let me make sure that's the 50. Should be. Yep, there's your 50. We're already below the 50-period moving average. So we're below the 50. We're below the 20. We're below the 40. We're below all of them. Oh, man. You guys suck. Maybe do a 1-hour show today. Damn you. And then you look at SPY. Similar situation, right? S&P today is down below its 50-period moving average. But I've got the bigger yellow box here. I think you're going to get an earlier trigger from the S&P. Earlier trigger from that S&P. So be careful. I'm not saying we're there. It's just... And again, I'm not willing to or wishing or hoping the market sells off. It's just if it does, then I gotta quickly flip my positions, get out of them, hedge them, or go short. And hopefully you all do as well. He said financials have been selling off. Yeah, it's funny how different markets move different directions. You've got a really significant decline in financials, and I think part of that has to do with the reality that that the Fed's not going to cut rates in March, and I think banks were actually counting on that. If you look at energy, though, so what do we think about inflation now? If energy is such a major component of inflation, you look just over the past couple months here on XLE, from that low point we established in December of last year to where we closed at today, energy, the whole portfolio up 23%. Oh no, inflation's not a problem at all. And look at the curve up, right? So there's always something moving up, always something moving down. All right, I got to wrap this up. Do I get out of here in 2 minutes? It's already 3 o'clock. You guys and gals. All right. All right. Tomorrow's Friday. I got no show tomorrow. You guys remember I have no show. I'll be taking care of a buddy of mine as you're supposed to do. But we do have major stuff happening. You've got that core PCE price index number and core PCE price index, core CPI number, and you also have your regular CPI. Here's the interesting part. Month over month, the expectations are we're going to come and stay right in line, which is okay, right? Let's say at 0.3%. If you look at the year over year, though, there's year over year, we're actually expected to drop from 2.7 to 2.5. And that's because we're going to drop a couple large spikes of monthly data on the monthly CPI. So that will be a pretty interesting one here. Hopefully, I really don't care which way it goes. Whatever happens. I'm optimistic that we'll get it to drop lower. If it does, I think the market will have a little bit of a boost up tomorrow, which I would like to see because I'm just holding that Tesla position and see how that goes. And maybe I'll open up some new positions, but I don't know. I've taken a couple pretty big lumps the first 2 months of this year, which normally doesn't happen, but it's okay. We'll get back on that horse and moving. Yes, you did get me to a 1 hour show. Yeah, thank you guys very much. It's a routine thing, but I just got to stay at the hospital with him for a couple hours, so there we go. All right. That will do it for me. Earnings-wise for tomorrow, I think I actually have the earnings calendar up here. Let me just bring it so you can see them. There's really not a lot happening. Typically on Fridays on this part of the year, you get energy companies reporting. Not a lot tomorrow, though. There's TC Energy, Camco, and that's pretty much it. Enbridge as well reporting earnings, and Nat West Group. So there you go. Go live from the hospital. I'm not that dedicated, Marcia. I'm not that dedicated. All right, that's going to do it for me, everybody. Hope you have a fantastic remainder of your day. Have a great weekend. I wish I had brought a little glass here to cheers you guys. So have a wonderful weekend. I will see you guys Monday. John O'Donnell's going to be on Tuesday, and I'm going to see if I can get Larry Jacobson to come on next week as well. He's been pretty darn big. Vote for Big Eb. What's Big Eb running for? Where are we going, Big Eb? What do you say? Historically, it's 3%. You mean for inflation? Yeah, but remember, Jerome Powell has said 2%. That's their target. I think it's unreasonable, but hey, there we go. Oh, Monday's President's Day? I'm not going to see you till Tuesday. Yeah? Wow, I got a 4-day weekend? I don't know what to do with myself. There's no way I'd want that job, Jeff. No way. I know right away as a president, you can never make everybody happy. And my goal would be to try to make everybody happy. All right, so we will see you guys on Tuesday with John O'Donnell then. Tuesday. I will finish my book, Liz. I was talking to Thomasina today. Thank you, Thomasina, for your help. Thomasina's acting as my PR agent. She's gotten me multiple gigs now, worked for other companies and presenting and speaking, so I'll have to finish that damn book. I have been working on it, though, guys. I have been working on it. All right. Have a great weekend, everybody. I will see you on Tuesday. If you want to discuss anything on Monday's show, email me, tradermerlin@gmail.com. That said, have a great weekend, everyone. I'll see you then.